Hello everyone, it's the Cowboy. Welcome to episode 24 of Bitcoin and Ethereum Elliott Wave Analysis. Wow, I can't believe we've done 24 episodes so far. So here we are a couple of weeks later, and Bitcoin has been dropping aggressively from 64,000, came down all the way to 30,000. So, a very surprising and sharp decline into the price of Bitcoin. But I don't think it's something, to necessarily worry about. So let's jump onto it and take a look and see where the trends are and what the counts say. Guys, you can find me on Telegram, Elliott Wave Cafe. It's a public chat and a public forum where you can come in and have discussions, post charts, ask questions, things like that. You can find me also on Twitter at Elliott Cafe. All right, so what's going on in Bitcoin? I think we're still doing a fourth wave decline in here, and this it is at the primary degree of trend. So we have the larger cycle degree, 1, 2, and then the larger third wave cycle that should still be in progress towards at least 100,000. And, the sharp drop, it's surprising, but it is coming nicely into this, channel trend line to the bottom section of that trend line. And you can see in here, we've pulled about 38% of this entire larger third wave, which is a very normal and standard pullback for the fourth wave. Now, the thing that kind of works in our favor is the fact that these corrections in here were pretty much flat and kind of sideways, and by the guideline of alternation we know there's usually a difference between the fourth wave and the second waves, and I can see this fourth wave being a very sharp decline. So far it's still in three waves, so this continues to I think be the driving force of this count, where we're continuing to look at it as a larger cycle third wave that's being a fourth, comes back into the 38%, comes back into the trend line, also comes back at the previous fourth wave of a lesser degree. So if you're counting 5 waves inside this primary wave, you have that intermediate degree where you go into another 1, 2, 3, 4, and 5, and then you kind of get your support down into these levels. Now, the narrative here seems to be, that maybe Bitcoin has found some kind of a larger top and we're actually, crashing much lower. There's all this talk about energy consumptions and about, China banning and all this FUD that kind of travels around and, apparently influences the price. Listen, things, get a little bit frothy. And the moment you rally, from 10,000 to 60,000 and you have a larger third wave advance, it's normal that you're going to get some pullbacks. Now, you never really know exactly how these pullbacks are going to unfold, and if they're going to be sharp or a little bit more sideways, but you just kind of have to work with it. And overall, I don't think the larger picture has changed in any way. I'll show you some longer term counts so you can kind of see where we are, but I don't think that I'm ready to turn bearish. I think, if anything, we're not bullish enough onto the price of Bitcoin at the moment. So let's see how this continues to unfold. I'll continue to favor this as my primary interpretation for now. And then if things kind of start to extend a little bit more, or I'm not getting enough of a reaction from these levels, then I would have to start to entertain the idea that actually maybe this larger third wave completed into these levels and we're actually starting to work our fourth wave cycle in here. The reason I don't like that count is because I think we're fairly dangerous in size and in time in our approach actually to the top of this wave one. And for this fourth wave to kind of properly develop, I think it needs this larger third wave to be a little bit bigger. And it just doesn't give me the correct proportion, because, if you look at the size of the second wave, you're expecting something similar into the fourth wave, and that's going to take, quite a bit of time. And if you look at that, how can this unfold? Even when you're looking in time, you're looking maybe, let's say toward the middle of the next year, by the time, actually towards the end of this year, by the time that this could be done. Let's see here. This is 2022. No, towards the middle of the next year, actually, right? Because that's right here. I have 2022, and this here is possibly 2023, right? So if you look at the time, travel in the second wave, this fourth wave will be a pretty massive, and unless you're having some kind of a very long triangle in here, to kind of match whatever happened here in the second wave, it's just not gonna look pretty. So I have something else that I want to show you in terms of what I think it happens next, in case this is not a fourth wave of a cycle degree. So kind of dropping down to more of a 2-day chart, you can see the subdivisions here going in a 1, 2, and then you're having 1, 2, 1, 2. So this is our intermediate degree that kind of finished up here, at 64,000, and then you're having the sharp drop in this ABC into the 38%. So what are we watching for right now is, what if, this move here, it's going to start developing into a 5-wave structure, and you're going to have, instead of an ABC, you're going to have a wave 1, a wave 2, you're going to have a wave 3 in here, some kind of a 4th wave that's supposedly forming right now, and then you're going to drop below here and you're going to have a 5-wave decline. So what this does, this obviously opens the path for a larger corrective move, and you're not going to be able to count it anymore as a triangle, because now you have a 5-wave decline. So that's going to be at least a zigzag or a complex correction. Now if you're getting a zigzag, and that's a wave A of a larger zigzag, you're going to get a 3-wave advance here in a wave B. Let's say go back and retest maybe 45,000. You're going to pull back roughly between 50 to 61% of this decline, wherever this is going to end up finishing, in case we're going to get a 5-wave decline, and then you're going to get another push back lower in here. Now you see what happens. You're already coming into the area of this, at the top of this wave 1, in the area of the wave 2. And that's not going to be fair and allowed actually for a 4th wave decline. So what that does actually to the count, and that would be kind of my next interpretation, what I would go to this whole thing being as a 2nd wave. And this is what I mean, what I'm thinking that we're not bullish enough into the price of Bitcoin, is that we're going to switch over to this wide count. And you're not going to see this count in many places. But I think, more and more I'm trying to kind of warm myself up towards this count. And in terms of its proportion and in terms of its cycles, I think it makes total sense. So if you're counting here from, let's say 2008, 2010, you're looking at this whole move up into 2017, 2018 as being a cycle wave 1 into Bitcoin, right? And this is a whole move in here that was very, very impulsive. So now you've gone for, let's say, 2.25, right? Almost 2.5 years of a sideways consolidation here, sideways corrective bear market. We had an attempt here to rally, and then we kind of pulled back. So I'm starting to lean that this could have been just a simple X wave in here, and this was just an ABC for a W. This was a fake out in wave X. Come back into this wave Y. This wave Y was never strong enough to actually take these lows, because the market was pretty powerful. It came into this trend line, and you actually had a wave 2 cycle low, right in the March 2020. And after this wave 2 cycle low, we're starting the next move higher, right? So now I'm beginning with the wave primary 1 that, took us from 4,000 Bitcoin to 64,000. We're pulling back here. And this decline, if it's a 2nd wave, it could take a little bit of time. Right, maybe for the next year, or maybe until the winter, early spring next year, where you're going to go, okay, fine, we're having a 5-wave decline that started. We're going to go in a B wave pullback, and then we're doing a 2nd wave in here. And that's going to be your 1, 2, 1, 2, and then we're getting ready to break higher here in this much, much larger, this 3rd wave primary that's going to take Bitcoin, let's say, all the way to, let's say, 200,000 into the next move in here as part of this larger 3rd wave cycle. Actually, that is not 2,000. That's 200,000. That's $2 million. Okay, so that would be kind of the next larger advance. As we're kind of pulling back here in this, after we're finishing the 2nd wave. So to kind of sum things up, that's what I'm looking at. I'm looking at this a move out of here to continue to give me a larger 3rd wave cycle, and possibly complete towards 100,000 to 120, maybe all the way up to 180 in this larger 3rd wave. But if we're starting to fall apart a little bit more in here, I would have to switch to my wide count, where this is actually a 2nd wave, and everything that we kind of thought about this being a 5th wave advance into Bitcoin, it's probably going to end up just in a much longer advance. So taking a look here at the moving averages, we're pulling back. These are the weekly charts. We're pulling back towards the 50-week moving average that at the moment it's at about 27.9, 28,000. We kind of came very, very close to it on this drop. You can see, that the trend is clearly to the upside. You have the 200-week moving average resting at about 12,000. And, we did drop below the 21 week. Now, this is slightly concerning because you're basically killing this upside momentum. This 21 week was a very, very good supporter of prices into the, 2015 to 2018 bull market. And right now we kind of broke below that, and we just kind of tested it once, and then the market gave up. Now, the next level of support, it's the 50, which offers, nice support into all the bull runs in here. So we'll see. This would be a pretty good level where the markets, would kind of try to rest and pick up their momentum and continue to push higher. So I continue to remain bullish, obviously longer term here. These are weekly charts. So, depending on your time frame, these are pretty good levels, I would say, to try to get involved and try to accumulate Bitcoin. Again, if it's a second wave, you're probably going to get a chance, to get even more as we're pushing back possibly towards 20,000. So here I come, and I'm going to show you the next charts in here. These are the dailies. So, and I'm going to show you this one really quickly, but as you're pulling back into the 200-day moving average, we broke below it, and you can see now that you're breaking, that you went back and retested the 200-day moving average, and these 50 and 21 are pointing lower. So now you're having a fight between, the longer-term traders, the shorter-term accounts as well, and we're trying to see, who's going to win this battle. As I was saying into the program here, into our kind of regular daily commentaries, I don't expect this 200-day to give up that easily. Even if you're going to make a quick new low in here, we're probably going to try to push back up higher and regain this 200-day, play around a little bit more around 50 and around 21-day moving average before this market, let's say, seriously decides to turn bearish, or it's actually resuming the uptrend. So, shorter term here, I think, we're going to be in a period of consolidation. We're going to kind of push back up higher, try to retest those $45,000 level, maybe even go back and retest that breakout back in there. And then we will see, what the price will do following that. And with that, I will go and talk a little bit about the monthly candles, because I think these are important. So a couple of weeks ago, I kind of warned on this monthly candle, right, for the month of April being a pretty kind of nasty looking candle. You've had a very, very long uptrend in here, right, with a lot of bullish months, and then all of a sudden you kind of stop that momentum. And you could see that on the daily charts too, as the market was making, the highs were getting smaller, and you started to kind of get that divergence, in price. And, even in hindsight, right, you could say, yeah, this was a pretty important signal that the market is going to take a breather, along with the monthly candle that we've gotten in April. And now, sure enough, in the month of May, the sell-off started to be very aggressive. Now, what I'm watching in here with a few days left in this month, right, until Monday, let's say over this weekend and on Monday into Tuesday, I'm watching to see if the market is going to be able to push back a little bit in here as we're kind of finishing off this month. And I'm trying to see if we're going to get some kind of a wick into the month of May that's going to possibly look a little bit more like what we've had back in March of 2020. And this would be a good indication that the market is finding solid support on a monthly basis, and then it's looking to move higher. The next indication that I will look for into the month of June would be if we can get some kind of a bullish engulfing candle in here, and it's going to look something like that. And if that happens, and this becomes a nice white candle, that's going to be a massive rejection of this trend line of just lower prices. And it's probably going to look something like this. And then we're going to be looking into much higher prices in Bitcoin. So if the market continues to sell off in the month of June, we're going to come back very likely and retest the breakout. Remember, this $20,000 breakout was never really retested by the market in any way. So this would be the chance to do so. And then I would start to count this as a wave 1, and that's as a wave 2 pullback, retest the 20K, and then get back up higher. So these are this is the game plan kind of going forward over the next few months, and remains to be seen what the market will decide to do. So these are the scenarios that I see happening on there. Next, let me draw your attention to the S&P 500 and the Bitcoin correlation chart, because I think this is very important. As you can see, even going back 3 to 4 years, these assets are very well correlated. You have your ups and downs here in the correlation diagram, but overall, they're kind of trying to trend into the same direction, which means they're kind of both risk assets when you actually look at it. And back here, let's say in 2019, between 2019 and 2020, you have a little bit of a break into the correlation. as you could see the S&P 500 was trying to push higher. Bitcoin was actually sounding the alarm a little bit and saying, well, I don't think so. Something is going on here in terms of risk, and let's just kind of be cautious. You don't know exactly who's leading who, but nevertheless, you've had this big drop into the S&P 500, kind of following that divergence, and then they kind of picked it back up, and we started to get bought and continue to kind of trend into the same direction. And we're having something similar that happens right now, as the S&P 500 is trying to continue to stay near the all-time highs in here, and Bitcoin is actually pulling lower. So I'm very, very curious how this is going to resume. If Bitcoin would actually turn from here and, let's say respect the S&P 500 kind of trend and continue to push higher, or, Bitcoin is actually sounding the alarm and we're going to have a massive crash into the S&P 500 and come back, let's say, I don't know, all the way back here to 3,600 or something from 4,200. And this would be something like this. So, I'm definitely keeping an eye on this correlation. I want to see, what's happening here, and how quickly Bitcoin kind of recovers from the levels, if it does, or if we're starting to see any signs into the S&P 500 kind of cracking. I continue to notice, a pretty good a pretty good trend here, and a pretty good rotation into the S&P 500 and Dow Jones and the Nasdaq, and there's a lot of pockets of growth in there, and this market continues to look and act very, very bullish. I think there's plenty of industries that are actually moving nicely on the bullish side, and this just keeps me bullish on equities, and that's why this disconnect between Bitcoin and S&P 500, it's something that's an alarm a little bit, and I'm not sure if if Bitcoin is the one that's actually sounding the alarm, or it's basically an over-exaggeration into the sell-off, and this uptrend into risk and into the buying of Bitcoin should continue. So that's just kind of my 2 cents on this analysis on here. So here we go. This is a chart that I showed a couple of weeks ago as well, where we're looking at at the seasonality of Bitcoin and kind of how it acts, during certain months of the year. And you can see in here, the month of May was supposed to be a pretty good month. It didn't really happen. I think, this is a chart that I presented two weeks ago, where the average, close for the month of May was up about 20% in here, and right now we're at about 17% with the drop that we have. So in average, that kind of dropped. In 70% of the time, the month of May kind of closed bullish, then higher than the previous month. The month of June is also a pretty bullish month as well, where you have about 71% of the cases, the month of June closed higher, than the previous month. And then you're slowly starting to drop in here as you're going into July, August, and September. So in terms of seasonality, we're actually supposed to get into more of a, bearish market in here for the next several months, and then pick up in October, November, and December. So we'll see if maybe this kind of coincides with that second wave pullback, come back in 5 waves, go back up here for a little bit and then drop again into August and September, test that 20K to 25K mark, and then actually turn back bullish towards the end of the year. So just kind of putting a little bit into perspective what happens in terms of seasonality on there. Also, I wanted to kind of draw your attention in how much we actually lost in terms of performance since the beginning of the year in Bitcoin. Actually, if you're looking at this, and I think this is the beginning of the year, right? When we kind of started back into these levels, and then Bitcoin kind of rised up almost 120% lead. And then, now you're back at about 23%. Actually, oil beats Bitcoin right now because it's up about 37% on the year versus Bitcoin that's up only about 23%. So the rest of the markets are pretty much, kind of flat, anywhere between, let's say, 10%. And you have bonds here at about 11.77. If you want to know more a little bit about this kind of macro stuff that we're watching and we're looking, check the video, the Macro Cafe, which we've done last weekend, where I talk about, all these other asset classes, from gold to oil to S&P 500 and everything in between there. Guys, take a little break, have some coffee with Elliott Wave Cafe, subscribe and like this video, continues to push our rankings higher. I noticed that we're having more and more views. We used to have about 100, 150 views, maybe about 200 views for these videos, and we're slowly climbing for 500, 600. Now I'm getting almost 1,000 views between these, every couple of weeks on this video. So which means that the videos kind of get spread and people like the content. So continue please to subscribe and like so more people can see us and join the Elliott Wave community and kind of what we're watching. Let's jump over to Ethereum and take a look here. This is a chart again from May 1st. We were looking for this Ethereum to continue to push towards $4,700, $4,700, $5,000. Those targets were reached there as part of this larger third wave intermediate. So if you look at the chart which was updated today in here, again, longer term, we're looking for a larger third wave cycle in here. In Ethereum, or like in Bitcoin, we might have to switch to this being a wave 1 cycle and wave 2 cycle terminating up into these levels. This becomes a wave 2. We're doing a wave 1 of these lows, possibly finished or close to being finished, then another second wave pullback in here in Ethereum, and then we're actually starting the much larger trend. So that's kind of my next to-go count in case this correction here gets a little bit bigger. Because I still think in terms of the overall, advance of this project, it's going to get really, really massive over the next years. And again, I don't think we're bullish enough on Ethereum. Kind of being more conservative, it's fine, but this network, I think it's going to grow tenfold, and it's got a lot of potential ahead. And the way we do that is by kind of splitting the cycles here, 1, 2, 1, 2, and then continue to push higher. So for right now, we're kind of trying to see if we can get some kind of a fourth wave intermediate in here. That's a 1, 2 primary, 1, 2, 3, 4, possibly doing a triangle here in this fourth wave in Ethereum, followed by a push back up higher in this fifth, finish this larger third wave primary, then a fourth wave. Let's say this one was a little bit more directional. This one can start as another triangle in here and then continue to build higher. So this is more of a kind of conservative look, as we're kind of continuing to build, the trends higher. But if this decline, let's say it's a 5 wave and you're starting to see something like a pushback here in this B, and then you're pulling back lower, right, and you're starting to break towards $1,000 to $800 in Ethereum, that's more than likely going to be a second wave, and that's going to be a wave 1 impulse, followed by a second and then a continuation higher. So that's where I'm at. I'm kind of starting to prepare mentally, right, to accumulate more in case we're going to get, those declines lower. And this is kind of what we're looking on a 2-day chart. So 1, 2, 1, 2. You can see the subdivisions here in this minor trend. 1, 2, 3, 4, and 5 for the third. And now, you have a pretty impulsive move of these highs. The highs from back in 2017, 2018 are here at about 1422, so they're probably going to offer support, and this 38% level comes at about 1600, which I don't think, we just came just shy of that on this decline in Ethereum. And then here is a look at the larger trend into the moving averages, and that's why I'm saying we might not be bullish enough, because if you're looking at this as being the first cycle in Ethereum as a wave 1, and this whole thing here is a corrective pattern, right, as a second wave, that means that we're just kind of barely scratching the surface of the next larger advance that can take Ethereum towards 68 to even 100,000 over the next, let's say, 5, 6, 7 years, as we're pushing here, maybe in a wave 1, a wave 2 in here, come back towards the 50, and then continue to kind of trend. You can even place some trend lines in here like that and kind of create a channel where Ethereum can advance in. So, let's take a look also at the Ethereum Bitcoin cross. We were bullish on this thing ever since we hit this kind of 61% where Ethereum, really started to push higher and outperform Bitcoin. So that's a 1, 2 of these lows to a leading diagonal. That's another 1, 2. I think this wave 3 is probably done, due to this kind of, very, very sharp sell-off. Possibly we're going to do a fourth wave in here right now, right? This was more of a directional decline. This could be a little bit more sideways. So a little chop between Ethereum and Bitcoin. They're probably going to try to perform, in a similar manner, let's say over the next few weeks, maybe a couple of months. And then Ethereum should probably break back up higher again and try to finish off this larger third wave in here as part of a wave 1. And as Ethereum maybe grows and tries to really, really challenge Bitcoin's dominance in there, this will be just wave 1. larger pattern where you're going to look at the second wave and then a continuation higher. Next in here, guys, I have, a little bit of a rotation graph, right? So we've looked at it, let's say a couple of weeks ago, and I think we were maybe somewhere up into these levels, either back here or back here. So this is kind of looking back 15 weeks of performance on Ethereum versus Bitcoin. And it's clearly into the leading quadrant, right? And it's pointing higher with a lot of aggression. Again, just by looking at the Ethereum Bitcoin cross, we might take a little bit of a pause, be flat, or maybe even lose a little bit of a momentum. But overall, Ethereum continues to be, the kind of the dominant force in here, as in terms of a relative basis, outperforms Bitcoin, and it's quite high here onto this leading quadrant. The moment you're going to see Ethereum point lower, or even kind of turning this way, then and only then Bitcoin would kind of start to outperform and and just kind of regain some of their strength versus Ethereum. But for right now, this is kind of has a very, very nice northeastern heading here up into the right in terms of relative strength. And I'll leave it at that, guys. I mean, you can find us on Elliott Wave Cafe. There's a bot here that will take you straight to our service. There's a 7-day free trial. There's no card required. You can come and see what we do up there. Here is some of the menu that you can find, and we have a very, very nice community there that continues to grow, and guys up there get really, really good at starting to count waves, and sometimes I don't even have to post a lot of things because they're ahead of me with a lot of these counts anyway, and but it's nice to see the discussions and the back and forth between certain counts, and we dive into the smaller time frames, and we take live trades, and it's a very, very nice community where we're enjoying being there every single day. And right now, if you take even a 1-month subscription, you can get access to our Elliott Wave course. If you know nothing about Elliott Wave, you can kind of take this one, and it will put you on the right path to kind of develop a little bit more. And then during our daily videos and our regular daily updates into the counts, things will start to make sense, and you will see kind of what we're thinking in terms of direction and counts, and what are some good levels to entry, and what are some good levels to kind of stay away from, right? So you can get that with the 1-month subscription right now, guys. I'll leave it at that, and I'll see you back in a couple of weeks. Again, thanks again for watching. Please subscribe and like this video, and I'll talk to you soon. Bye bye.